Hello and welcome back to this channel. In this video, I am going to talk about the Japanese candlestick chart pattern. To understand candlestick chart pattern, you must have the knowledge of financial analysis. What is financial analysis? Financial analysis is based on two essential concepts. The first one is knowledge of technical analysis or reading charts. And the second one is knowledge of fundamental analysis or reading news. These are some of Japanese candlestick pattern. A bullish candle, a long leg doji, a bearish candle, a bearish hammer, a full type Marabozo, a bearish shooting star, a long leg pin bar, and a dragonfly doji. There are many types of charts you can use. You can use bar charts, candlestick charts, or line charts, where Japanese candlestick charts are the most popular and widely used among traders. Each candle can give traders valuable information about the price going upward, downward, or even going upward again. When the price is going upward or downward and faced with a sudden reversal due to hammer or shooting star, you can spot a wonderful potential opportunity to buy and sell signal. Let's find out more detail about candlestick. When we see a bullish green candle, when the open price is below the close price, green candles represent increasing in price. When we see a bearish candle, the open price is above the close price. The upper and lower shadows represent the highest and lowest price level for the duration of the candle. For example, if the duration of or time frame is 1 hour, then each candle represents 1 hour of trading. The bullish body represents the price range between the open and close for a set interval. The bearish body represents the price range between open and close for a set interval. What is reversal pattern? When candlestick chart making its way upward or downward, any patterns that could change the trend directions are so-called reversal pattern. What are bullish and bearish reversal? If the price reversal occur when the trend is going upward, it is a bearish reversal and it produces a sell signal. If the price reversal occur when the trend is going downward, it is a bullish reversal and it produces a buy signal. Candlestick consists of green and red candles that they are going together side by side. The green candle represents of buyers and the red candle represents of sellers in the market. Therefore, each candle give you valuable trading information about the price movement going up and down. In a specific time frame. If the time frame is 1 hour, then each candle represents of 1 hour of trading. Red and green candles are also show the price fluctuation, and this creates a good opportunity for traders to buy and sell shares. This is to sell shares, and this is a buy signal. The sell signal was due to bearish tweezer top, bearish engulfing and shooting star, and the buy signal was due to hammer and bullish engulfing. What is bullish engulfing reversal pattern? Bullish engulfing consists of two candles. The first one is a bearish candle and the second one is a bullish candle that engulf the bearish candle. If this pattern is seen at the end of a downtrend, it suggests an uptrend reversal. What is bearish engulfing reversal pattern? Bearish engulfing consists of two candles. The first one is bullish candle and the second one is a bearish candle that engulf the bullish candle. If this pattern is seen at the top of an uptrend, it suggests a downtrend reversal. How to blend bullish engulfing pattern with candlestick matte blending? Bullish engulfing consists of two candles. The first one is a bearish candle followed by a bullish candle which engulf the bearish candle. In order to blend these two candles, we take the open of the first candle, we take the close of the second candle, we pick the portion between open and close, and then we take the high and a low of the pattern. And the equivalent is going to be a bullish hammer. That is the reason when bullish engulfing pattern it occur at the bottom of a downtrend, it suggests trend reversal. Why? Because if we blend it, the outcome is nothing but a bullish hammer, which suggests trend reversal when it happened to be at the bottom of a downtrend. What is bearish tweezer top reversal pattern and how you blend this pattern with candlestick matte blending? Tweezer top consists of two candles. The first one is a bullish candle and the second one is a bearish candle, which the high of the two candles occur at almost exactly the same level following an advance. If these two candles appear at the top of an uptrend, it suggests trend reversal from uptrend to downtrend reversal. In order to blend these two candles, we take the open of the first candle, we take the close of the last candle, then we take the portion between open and close, and then we take the high and a low of the pattern. And the equivalent will be a bearish shooting star. That is the reason when tweezer top appear at the top of an uptrend, it suggests trend reversal. Why? Because if we blend these two candles, the outcome is nothing but a shooting star, and shooting star suggests trend reversal from uptrend to downtrend. It's amazing. That's all, folks. If you like this video, thumbs up, subscribe to my channel, leave your comments. Thanks for watching. Take care and see you next time.